Hello and welcome back to Crypto Avenue. Nice that you tuned in. So let's start with my new video about technical analysis again. Why? Because I missed something very important the last time, and that is the basic foundational information that I should have gave you before, but I will give it to you today. So it is the assumptions behind it. So why is TA relevant? And why is TA used still and will be used in the future? We will clear that together. We will see what the assumptions behind that are. And yeah, as I said, we live and learn. I forgot to give you this very important information, but today you will get it and see why TA is that important. So let's jump to the table of content. First of all, I will speak about what TA is. Second point is the three main assumptions which we have, or which you have to understand to get the point why TA is working and why TA is important for trading. And first point is the market discounts everything. We had that in the video before, but today I will go a little bit deeper inside this topic. Second point is the price of an asset moves in trends. This is very important for TA, and I will show you why. Third point, history repeats itself, and this is also very important for TA trading, and you will see why. So, point 3, TA versus fundamental analysis, FA. So I will point out some major differences between TA and FA, so that you can understand what the main purpose or the strategy behind these two sides are, and what the conflict is or what the advantage maybe of TA is. So fourth point is why TA matters for trading. So this will then be our assumption of, our conclusion of the whole presentation. So let's jump to the first topic. What is TA? So TA is the study of market movements in a chart to forecast trends. Probably you saw already videos, or you watched CNBC, Bloomberg, Reuters, whatever, and you hear people speaking about basically some assets, and you see a chart, whatever candlestick chart or any other chart, but most likely a candlestick chart, and then you see them doing lines, resistance, support, trend lines, channels, and so on and so forth, moving averages, MACDs, and many other indicators. Basically these are the technical analysts which try then to predict or forecast or anticipate market movements. So TA is just the study of the price action of an asset, for example an equity or in fund or in bond, or basically not fund but or a bond, or the forex market, the future market, the option market, you name it. So let's go to the first, before we go to the first time, just let's have an overview. We had that already. So the market movement discounts everything. The price of an asset moves in trends, and history repeats itself. Let's jump to the first point. Assumption number 1, the market discounts everything. So this is a very, very important thing, because this is basically the foundation of technical analysis. So we have to understand the premise of it. Otherwise, there's no reason to believe in technical analysis. So the technician, so-called, so the guy who, or the woman who uses technical analysis and believes in that, he believes that everything what could potentially influence the price of an asset, so fundamentals, that means earnings and so on and so forth, political events, let's say regulation from politics regarding some asset or regarding markets or whatever, or events that which influence, for example, the asset price. Let's say oil, for example. Let's say there's a crisis between two countries, and one of the country is a big oil supplier. So if they have any problem, you see price movements in oil. So this is what politics mean. Psychology as well, so fear and greed of the market participants, which also affects the price of an asset in the short term. And all these factors are already reflected in the price, so discounted in the price. So what is this meaning? So I told you before in the video, and I will tell you again, as an institutional, let's say, fund, hedge fund, whatever, these guys sitting in the banks or hedge funds or whatever are consuming all the data that they can get, all the data which are outside, for example, upcoming news or reports on earning reports, and all these relevant information which is outside is already priced in. So they get the news, they calculate the inner value of an asset, and this information are priced in the market, okay, under the assumption that everybody has the same information outside. So that means on the bottom line then is that you as a technician, you have only to study the price movement, because as all relevant data is already priced in from all these smart investors, you then basically just have to watch the price action on the chart, because there's no other relevant data. So everything is priced in, and the movements on the chart or the price action, there is a reason behind it. So just by looking at the chart, you know what's happening. Okay. And the market is driven by the law of supply and demand. So what is this meaning? If the first point, if the demand is higher than the supply, price should go up. You probably heard about it. So if people just want to have a product like crazy, they just want to have, I don't know, an iPhone, for example, and the demand is higher than the supply, you as a producer can sell this asset for a higher price because you have more people than you have products. And vice versa, if the supply is higher than the demand, the price should go down. This is basic law of supply and demand, and this applies to the market as well. So the view of a technician is the following. If the price goes up, by whatever reason, the demand has to be higher than the supply. So then the fundamentals must be good. So you have an indirect study of the fundamentals. So you get what I mean. So this is what I meant by just looking at the chart. So if you see the price action of a particular coin or token that you look at, and you see that the price is going up, there has to be a reason behind it. First of all, the demand must be higher than the supply, and behind that there's a fundamental for it. And as a TA, as a technical analyst, you don't have to know what the reason is. So you get the point. So you studying indirectly the fundamentals. This is the view of a technician. He don't want to know the reason behind it. He's just looking at the movement caused by the fundamentals behind it. So this is very important. This is the reason why I wrote it in red and bold and big. Not the chart is moving the price, the fundamentals behind it. My experience from the past is that the people outside, they think, the people which are not informed about TA, they think, come on, TA is bullshit because you're just looking at the chart and you want to gain profits out of it. I mean, you're just drawing charts. Yeah, you're just drawing lines or some whatever in the chart. That's true. You use trend lines or resistance support lines. But the reason for that is not that you think that the TA is influencing the price movement. No, you know that there is fundamental data behind it, and you just react on that. So you just react on what the overall market is doing. Never ever think that the charts that you're looking at or which you're working with are moving the price. This is stupid. So if you think that, then it's just a misconception. Keep that in mind. There are fundamentals behind it, and this is the reason why TA works. So assumption 2, the price of an asset moves in trends. So there's an assumption that you have that the direction of a trend tends to drive longer in the same direction rather than turning to the opposite direction. Just think about Bitcoin, for example. Bitcoin started at 2017 to do this parabolic movement. Yeah? So we had the first spike and we doubled or tripled the value of Bitcoin, and you think that just, whoa, this is way too high. I have to take my profits because the price will go down. So, and then what happened the next time? We had a huge run up again. And then you thought, okay, this is it. This is this. We can't go higher than $2,000, for example. I'm out. So you're out again. What happened the next time? Where are we right now? Right now, the Bitcoin price is, just let me have a look. $2,400. $2,400. Just look at the price chart where we have been in January. So this is what the technician relies on, that the trend tends to go longer than you think. And with this assumption, the technician tries to identify the actual trend and trade in this direction until there is a sign of turning back. So the assumption is that the movements or the trend in that particular case of Bitcoin this year, that the trend will go higher and higher and higher. And it's doing. It could go much higher. Maybe we see 8,000 this end of December, maybe more. Could go down as well. But by this assumption, it has to be some big I don't know the right word now. Something major has to be happen that the price goes down. So, and what is the technician trying? The technician is trying to see and read the trends and participate by following the trend, because the trend is your friend in that case. That means that, imagine if you wouldn't rely on this assumption and you would say, okay, the price went up, spiked the first time, we doubled, I will go short, and you go short, you would lose hell of a money if you wouldn't rely to that. What you then rather should do is rely on the trend and try to go with the trend as long as you can, because trends are most likely strong and tend to go longer as you think. So let's go to the next slide. History repeats itself. And this is basically based on the study of human behavior and psychology. So, as we know, TA is around since 1884 or something, should be 1884, so more than 130 years. You could observe the charts for a long time, and there are many chart patterns outside, like you probably heard about head and shoulders or double tops, double bottoms. If not, you will see it and hear it and learn it in later videos that I will load up. But the market participant which use TA, day traders, also swing traders or traders with longer horizons, they use TA as well to find good entry points for their trades. And the assumption is that, okay, they worked out for 100 years, let's say, so they should work out now as well. This is the assumption. But why should this work? I will show you why. On the next slide. This assumption is based on the human psychology, as I said, which tends not to change his behavior. So this is a quite interesting point. If you think about, I wrote it down here, so we all know examples from our life, right? I don't know, for example, you as a guy, you forgot to take your socks and put them, forgot your socks on the ground and don't put them where they belong to, and your girlfriend says, screaming at you like, put your socks there where they belong to, or whatever. Or for example, I don't know, you have a certain behavior and all the time after you did it, you just say, how can I be so stupid? I repeated this mistake again. And this applies to so many things, you know, and we all experience it in some different ways in our life. It doesn't matter if you young or old or a woman or a guy, you know this from your life. And why should this change in trading? We are like we are, and our psychology tends to have a certain balance. And everything which disturbs this balance is, for us, cognitive-wise, a problem. So this is why we tend not to change our behaviors. So this is why it's so difficult for us to change habits, basically. And this is why TAs rely on that as well. So then the bottom line is, so the key of understanding price movements in the future is a study of the past. You study the market behavior on, I don't know, special events, for example, and you see, okay, if price earnings have been good, but the outlook before was bad, how does the market reacted on that? And you choose, I mean, I apply that now on stocks, because in Bitcoins or in cryptocurrency, this is not possible. What you do is basically you study them. You study different market behavior in different environments or trends, and uptrends, downtrends, and sideways trends, and you learn from them. And based on these studies that you have in the future, you try to apply them. In the past, you implement them in the present now. So now let's go to the differences, or to the between technicals and fundamental analysis, or what they have in common. On the left side, you see a TA, so technical analyst. They study the market movement. So what is the fundamental analyst doing? So the fundamental analyst is studying the economical facts. Let's say you are an analyst in a investment bank, and you're an analyst in a fund for some company or an industry, and you're studying, let's say, General Motors. So what you then do is just you go through the fundamentals. So the earnings, for example, and you get a clearer picture of the health of the company, General Motors, in this particular time. This is what you do. And based on this information that you have, based on your study and on your models that you work with, you get an value of the asset. This is what the fundamental analyst is doing. But what they have in common, what you see there, both try to solve the same problem. What is the direction of the price in the future? This is what the TA tries to by looking at the chart on the price movement. And this is what the FA tries to do, the fundamental analyst as well. He tries to predict the future of a company or a coin or whatever. Oh, good. It's not that applicable to cryptocurrency as it is in equities or bonds, for example. But yeah, you get the point what I mean. But both try to solve the same problem. What is the direction in the future? So the TA is studying the consequences of the market movement by looking at the price and where the price is going. So these are the consequences of the fundamentals behind it. And the FA is studying the reasons of the market movement. So basically the fundamentals. Okay. And there is a conflict between TA and FA. What you see is that fundamentals are not supporting major movements at the beginnings. If you study the markets, the equity markets, for example, you will see that without any obvious reason, it could be the case, or it is the case most likely, that the price of an asset starts to trend to the upside. Let's say you came from a downtrend, or you have been in a sideways trend for a longer time, and the market information, the fundamentals still look the same, so still not good, let's say, but the price movement of this asset is going up, so it's not backed from the fundamentals. Later on, what you will see is then the TA and FA synchronously, but for you as a trader, as a short-term trader, it could be too late for you. So it seems that the market tends to move earlier than the fundamentals do. So what I concluded here is, as the fundamentals are already priced in the asset, but the direction of it changing without fundamental support, the market seems to anticipate unknown outlook of the asset. This is why you probably heard it, and if not, I tell you what common sense is outside. The market or the participants are trading the future. You never trade the information that you just have now. I mean, you can react to, there are some news trading techniques, but most likely you're trading the future. So you try to anticipate the market with a time horizon from 1 month to 2 to 3 or even more. Because as already everybody knows the information which is outside and everybody can see it and read it, there's no edge for you, or there's no edge for the trader. So the trader tries to find an edge by anticipating the future. And this is the reason why you have these problem with TA and FA at the beginnings of a change of a market, from an uptrend to a downtrend, and from downtrend to an uptrend. So why TA matters for trading? Just let me sum that up shortly for you. If you accept the assumption of TA, so all the assumption that we had in the slides before, you will understand why traders favor TA instead of FA. We're talking here about traders, not about long-term investors, yeah? So, as you learned, TA includes FA indirectly, as fundamentals drive the price. By looking at the price, you have the fundamentals on the screen without reading anything about the company, let's say. So this is basically a shortcut to fundamental analysis. Think about it. Let's say you had to analyze every token, every equity, every bond, whatever, outside. How much time would this consume for you? This is why you have in big institutions analysts for one company, for example. They just read everything about a company or about a sector, automotive sector, energy sector, transportation sector, and all these sectors that you have outside. It consumes so much time. And with TA, you can shortcut it without actually knowing which hundreds of thousands of data or information or news there are outside. And by relying on TA, you can basically adjust faster to changes in the trend, because it's much faster, and the market participant or the smart money, so the guys which have the deep knowledge of the markets, they know how to anticipate, and they anticipate trends or trend changes before they happen. And with TA you can see them, and with TA you can react faster to them as you could with FA. So, on the bottom line, you can trade based on TA only. Yes, you can. But doubtful that anybody can trade profitable based on FA only without consideration of TA. So even if you are a trader, or the traders in hedge funds, for example, I mean, there are a lot of different strategies which a hedge fund manager or a hedge fund manager team can have. They implement technical analysis as well, but in a different way. So their trade horizon is longer than the trade horizon of a day trader, for example. The day trader is not interested in FA at all. But the hedge fund traders, for example, or the hedge funds are using TA to find entry and exit points. I tell you why. Let's say there is a company which have great fundamentals. You will see this outside. Unfortunately, I can't give you an example now, but I knew in the thought that even if there is some asset with good fundamentals or good outlooks, it could be the case that by whatever reason, for example, because of the reason that there's the attention on these company or on these assets is not high, that this asset goes down or just goes sideways in a very small range without any major movement. And you, based on your fundamental analysis, on your outlook in a hedge fund, in a hedge fund, and you want to you have a trade horizon of let's say 1 month to 3 months, it wouldn't make sense to you to go into this trade, because as we learned before, the trend tends to be longer than, or go to the same direction longer as you think. So if you would take this trend and the fundamentals are good, but the price of these assets is going down slowly, you would basically lose money. And as an institution, with the money of your investors, you don't want to lose the money, you use TA as well for the entries. You basically wait for the moment when the TA is good to find the entries. What I want to say is TA is implemented everywhere. Not only for the day trader, also for big institutions which trade on a longer horizon. Or a mid horizon, like hedge funds for 1 or 3 months. So therefore TA is very important, and there is a good reason why so many traders or market participants using TA for many years. So guys, this is the end of my presentation. I hope you liked the footage. I hope you learned a bit. One thing that I realized is, I don't know why, but he is not recording my mouse cursor. I tried to fix this. I couldn't fix it today again. I have to find a solution for it, because it's quite annoying to show you something on the chart, which I did in the video before, but I couldn't fix it, so I just uploaded it without it. I still try to fix this problem. But anyways, I hope you liked it. I hope you learned something new, and I hope you learned how or why technical analysis is that important. Please subscribe to my channel. Leave a like if you liked it, and if you learned something, leave a comment. Do you have any experience with TA? Did you lost money, or did you like my content, or did I miss something to tell, or could I do something better? Then please leave me a comment in the comment section, and hit the notification bell so that you don't miss my upcoming videos with good value videos for you guys. Stay happy, stay healthy. See you next time, guys and girls. Bye.